So it's final, Japan has folded. Now, when Bessent flew all the way to Tokyo last week, as we hinted, it was to force concessions from the Japanese. The US was fishing in a barrel. The amount of leverage they had was tremendous. And this is what happens when you close your eyes and you refuse to diversify. Now, Japan had years, they had decades to build partnerships outside of the US. And when Trump threatened to smash Japan's export economy, Tokyo folded their hand at the poker table. And boy, is it a horrible deal. To be honest, you can't really call this a trade deal. It's so one sided that Japan didn't even get the short end of the stick. Trump basically took the entire stick away from the economy. And once you hear the details, you'll see how punitive the terms and conditions are. And this is going to set Japanese industries back for a long time to come. It's just so horrible. The US is going to impose a 15% tariff rate on their favorite ally in Asia, so Japanese products, including cars and car parts, will face a 15% import tax when shipped to the US consumer market. Now, I guess that's better than 25%, but note that Japan didn't set any additional tariffs on the US, so this is already very one sided. The majority of the tariffs will be paid by US consumers, but we can be sure some Japanese exporters will get quite a few percentage points shaved off their bottom line. Revenue and profits are going to come down. And before we talk about the investment fund, let's touch on Japan's compulsory purchases from the US. So Tokyo will have to buy 100 Boeing planes to help Trump's favorite company stay afloat. In addition to that travesty, they will have to buy more American rice and spend $8 billion in US food imports. Defense contracts with US firms will be increased to $17 billion annually from $14 billion. So I hope you like sushi made with American rice. Half of your bento set when you visit Japan could be made in the US. It's just so bizarre. And this ties the US and Japan even closer together. The dependency is now greater than ever before. Not only must Tokyo keep buying treasury bonds, this time their earnings have to be recycled back into Boeing planes. It's just so ridiculous, I have no words for it. And I have to give Trump a salute, a clap for structuring such a deal and forcing the Japanese to sign on the dotted line. And this is what happens when you have total economic leverage. But the story gets even worse, guys. Japan isn't going to endure a higher tariff rate. They are going to have to invest in Trump's economy as well. It's a double whammy. A centerpiece of the Japan deal is a $550 billion investment pledge. So now the US doesn't need to come up with their own sovereign wealth fund. It will be funded by the Japanese. Now, part of the money will come in the form of loan guarantees. So if a loan defaults, most likely the Japanese government will pick up the tab. Taxpayers might be on the hook here. Now, I don't know about you, but at least to me, this is the highest of the year, of the century. Perhaps on par with the G7 confiscating Russia's assets. Now, Japan is beholden to the US economy in multiple areas, and it's fascinating to see how the markets responded to it. Now, Japanese auto stocks flew up as expected, and if the tariffs drop from 25% to 15%, that discount means more cars can be exported. Yes. So it is a reprieve of sorts, but the bond market is not having it. Almost immediately, Japanese bond yields flew up by over 30 basis points across the board. Borrowing costs in Japan went up in a big shock. And the trade deal essentially confirmed two things that are causing bond prices to collapse. And let me put it simply, a 15% tariff on Japanese goods is still enough to tip the country into recession. Now, the Q1 GDP this year was already negative or flat, and that's before Trump's tariff regime. And that means less government revenue and more subsidies needed to keep their industries afloat. It sounds like more borrowing and bond issuance to me. Secondly, Japan has to cough up almost $600 billion in pledges to the US. How are they going to raise the money? The US definitely won't want Tokyo to sell their stash of US bonds, so the funds probably have to be borrowed into existence. Now, of course, Bessent is pleased and he's doing a victory lap. The outcome, at least short term, is a win for the Americans.
When I was in Tokyo and Osaka, and then we got back, there were elections on Sunday. LDP did slightly better than expected. They don't have a majority. Japanese government was ready to deal. Only President Trump could do. He brought the Japanese trade delegation into the Oval and had a very fulsome negotiation with them. And I tell you, they're tough negotiators, but President Trump's tougher.
Now, this trade deal, as tragic as it is, opens up a whole host of questions for other US allies and trading partners, especially the next country under Trump's crosshairs. Will South Korea fold their cards too? We just need to look at the dependency they have on US trade. Now, Korea exported over $116 billion worth of stuff to the US in 2023, and in contrast, they bought only $72 billion worth of US imports. So the trade deficit is at least $50 billion, and in 2024, it's well over $60 billion, which means Trump is going to come knocking on South Korea's door, and we can probably tell what kind of deal he wants. It's going to be another horrible deal in the making. Now, one can imagine it will involve buying Boeing planes again and US food exports. And let's not forget buying more US weapons to guard against North Korea. So the MIC is going to win big again. But there will be an interesting twist here. Trump might demand South Korean chip makers to ship production to the US to start making semiconductors in the Arizona desert next to TSMC. So things aren't looking good for US allies in Asia. Their overdependence on one single market is now beginning to backfire, and Trump is ready and he's very willing to collect. And let's shift gears a bit and talk about the dollar today, because the plunge is beginning to spark real concern with Bessent. A falling dollar is horrible for US assets. Now, foreign investors today represent 10% of all US financial assets, 18 trillion in US stocks, 7 trillion in US Treasury bonds, and 5 trillion in US corporate credit, and that's a lot of money. Especially when it comes to US Treasuries, foreign holders account for 30% of all outstanding debt. And when the underlying asset, which is the dollar, falls by 10%, it eats away at the value of the asset. Now, Bessent obviously understands this. Behind his salesman mask, he's a Wall Street guy. He knows the stability of the dollar is essentially to maintain confidence in the entire system. So now we are witnessing one of the most dramatic U-turns in 2025. Bessent has learned how to do a Taco Tuesday from Trump. He now sees no reason for Powell to resign from his position as Fed chair. Suddenly, out of nowhere, Bessent is giving support to Powell to continue if he wants to. So why this change of heart? Well, it's because firing Powell will destabilize the entire US economy, especially when trade deals are still going on. We still have negotiations with the big boys, including China, Canada, and Europe. And until those are wrapped up, I don't think Bessent can risk that particular outcome. So the best option left is to blame shift all the problems to the Federal Reserve. It's really nasty, but it's a psychological game to get Powell to admit defeat.
But everything else that the Fed has done over the years has just grown and grown and grown. And this is what happens when you don't have oversight. They aren't subject to appropriations. They either use the money they make. Right now, they're losing about $100 billion a year, so they just print money to spend it. And I think a thorough review should be done. It can be done.
But will Powell bite? Will he waste time doing a review? Because we know what Trump wants for rates to come down. But therein lies the stalemate. If you drop rates, the dollar would likely fall again, and that puts even more pressure on the US economy, which isn't ready to compete globally just yet. And let's go beyond just the argument of US assets becoming less attractive, and that's baked into the cake. US industries themselves will suffer. Now, the US auto sector, for example, is getting hammered by Trump's own tariffs. GM just suffered a $1.1 billion hit to their profits. And this is a 17% drop in Q2, which raises a ton of questions. If foreign cars are tariffed from US markets, if consumers are forced to buy American-made cars, why aren't the numbers going up? Because it's all about supply chains today, which are still global. And there's no escaping that fact. Thanks to the tariffs, auto parts are facing at least a 15 to 30% tariff. And let's not forget steel, aluminum, and copper. The tariff rate there is at least 30% as well. Many components in cars come from China, so you have to stack on another 30% thanks to the trade war. And all these are independent of the dollar strength. So if the currency falls by another 5 or 10%, input costs for automakers will fly to the moon and other industries as well. Prices go up, US consumers will refuse to buy anything. What Trump and Bessent does with Powell will most definitely affect the dollar, and that in turn could cripple US manufacturing, especially when supply chains aren't fleshed out yet. But the mess could get even worse. Even the euro is taking away market share from the dollar. The world is busy finding alternatives, dollars are harder to come by thanks to the trade war, plus its value is just too volatile. Now, emerging markets are beginning to issue more euro denominated debt than dollar bonds. Companies and foreign governments from developing economies have sold nearly 90 billion euros worth of bonds. And this is very problematic for the euro dollar system if this trend continues. A big pillar holding up dollar demand is foreign entities borrowing capital in dollars. And if that continues to drain away, it would eventually hit the US Treasury market sooner or later. And why is this happening? The dollar falling is a big factor, no doubt, but the real concern here is the volatility of the currency. And let's explain this simply. As an emerging market economy, you want to borrow in dollars. You want the value of your dollar to be stable, and if it rises too much, you have to buy back more expensive USD in the future to pay back your creditors. Conversely, if the dollar falls, it's also a very big problem. Let's say you borrow $1 billion today, 6 months later, the dollar collapses by 10%. Now your purchasing power has fallen by 10%, which is a problem. You are borrowing money to spend after all. Now, some of you might be saying, oh, Sean, they can always hedge their positions, right? It's not that simple. You can add a few percentage points to the borrowing cost. So you are now paying maybe 8 to 10%, even beyond that, to borrow money in a collapsing currency. That's why countries around the world are beginning to say no thank you. And according to JP Morgan, Poland, Hungary, and Mexico are the top contenders for investors switching out of the dollar, and the market share to be stolen is tremendous here. Over 68% of emerging market sovereign debt is issued in dollars. But if the currency continues to drop or continues to be volatile, this poses a big risk for bond issuers. It's not really about the value of the dollar going up or down, it's the swings that makes it very unattractive. And that's why Bessent has to maintain the dollar's credibility today. Even if the plan is to grind the dollar lower to help US exports, it has to be a slow grind and not a sudden implosion. And this is why Bessent's taking a step back, he's backing off against Powell. If the Fed chair gets fired and Trump installs his own henchman there, the repercussions on the dollar could be tremendous. And this is something the US just can't afford today. But let me know what you think. Did Japan make a good deal with the US? And is the grand plan really to crash the dollar further? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.